We talk about defense and we talk about Bajaj Finance, which is actually on the offense in the Q1.
Absolutely. And in fact, it's going to be a fascinating conversation, I think, and particularly in the context of some people who had doubted whether or not Bajaj Finance would deliver the numbers that it ended up delivering, considering that May was when it got back or got beyond those restrictions that had been placed on it by the Reserve Bank of India, and two very critical products for the company in the lending space that were supposed to have impacted numbers. But then, look, that didn't pan out. What actually did pan out was a very strong set of numbers. The AUM growth, of course, is what everyone's focusing on, but drill down into the numbers for us, Harsh, what stood out?
So, Alex, essentially it's a 7.1% sequential growth when it comes to AUM, 31% plus on a year-on-year basis, and they've guided for 26 to 28% in FY25. So really the standout is the fact that they've done much beyond that in Q1, which is otherwise a seasonally softer quarter, right? So that's point number one. Point number two is generally Bajaj Finance Q3 is extremely strong, of course, given seasonality, Q2, Q3, depending on when
because of consumer loans,
festive season sets in, and therefore will be interesting to see as to how Q2 and Q3 pan out. But if they were only to achieve the 28% growth target, which they've guided for, they only need to grow at 6.1% sequential basis, back of the envelope math, 6.1% sequential in Q2, Q3 and Q4. And if we can pull up the numbers in the last 7 quarters that they've done growth of more than 7% in 5 out of the last 7 quarters. And therefore, very strong chance that they might beat that 26 to 28% guidance band for FY25.
Do you recall what happened in the other 2 quarters?
6.1 and 5.7.
Yes, 5.7.
Not bad, Neeraj.
But from a reason perspective, you're absolutely right, 6.1 and 5.7. But from a reason perspective, I'm not sure what were the one-offs. 6.3 that they clocked in Q4 FY24 was largely on the back of these 2 products being embargoed.
Yes.
And therefore, that was one of the reasons. The 5.7, I'm not so sure, but it's something worth looking at.
So the chances are that they are going to beat their own guidance. Do they change that at any point? Will they review it possibly this quarter?
It's generally very unlikely of them to come out and change their guidances, not till H2 FY25. I don't expect that to happen at least till H2.
Okay, so the growth is in place. What about the valuations?
So honestly, when you're looking at
sorry, can I just slip in a question before we get to the valuations, right? So, Harsh, interesting that UBS said that they expect weak EPS growth of 11% YOY, which is the slowest in the last 12 quarters because of higher credit cost and decline in NIMs. So while they're having this AUM growth, could the other parameters match as well? Is it possible to hypothesize about what could happen there?
So, Neeraj, excellent, because that's where I actually wanted to kind of deep dive a little bit before going ahead. So, there is an expected 30 to 40 bip NIM contraction in the first half of FY25. This has been guided for and therefore likely priced in.
Okay.
Right, and you saw a whole slew of brokerages cut their EPS estimates in Q4 FY24 post this guidance. So I think the likelihood is that basis what most analysts are projecting, this number is a beat. And therefore likely EPS should also be a beat. It may be a marginal beat, but it likely should be a beat. Now the only question is how much does margin moderate in Q1 FY25?
Is that going to be on the basis of the product mix? Does that change at all?
It does change on the basis of product mix, but we don't have the AUM
so that I'm saying, what is the worst case scenario?
It's going to be tough to say, but likely double digit is still expected from an EPS growth perspective. So it's tough to say exactly or quantify exactly how much the EPS will get impacted by if the margin number changes dramatically.
So what's the reaction there for Harsh? I mean, will it likely get a thumbs up today, and does that bake in then the positives from Q1? Because in cricket parlance, they have done fabulously well in the power play, and the required run rate is not very high for the rest of the overs.
But you can't count on required run rate, as we know very well based on the World Cup final.
Well, so you're absolutely right there. Generally, Bajaj Finance is a stock which moves on the basis of growth. And that's what most street analysts want to look for, or that's the real clincher, if I can call it, from an analyst perspective. So, and because the growth number is better than what most people were penciling in, likely the reaction should be positive.
Okay.
And of course, then it will depend on how the final numbers actually pan out, which is maybe 2 to 3 weeks away. And thereafter, where does commentary lie?
Yeah, okay. So hopefully batting like Virat Kohli and not Klaasen in this case, and is steady.
You
not
mind batting like Klaasen?
No, I mean, come on. So history being the judge, right? Okay. Hardik Pandya took the wicket when Klaasen was looking really good. That's the context. All right. So run rate was really good.
I missed the context. Yeah.
He missed the context.